Good morning, trading world. It is December 7th, 2022, and this is my pre-market outlook and technical analysis for day trading the markets. It's 7:41 a.m. on the East Coast, and let's get to it. I said that Tuesday and Wednesday would go a long way into determining if we get a bloody December. This is where it gets confusing. Will we catch a break in the selling enough to turn the tide of short covering into an algo buying frenzy? We will see today. Not really interested in doing a lot in this market, but I may enter a small bull put spread with an end of the month expiration if we see the 390 down to the 389 area today with the indicators lining up right. But like I said, I'm not really interested in doing anything in this market. Looking at the broader market, defensive sectors are picking up. Can professional money managers pull it off again and find the right combination of equities to buy to take the market back up? Also, the open interest on the SPY is so negative, it could be taken as a bullish sign of this option expiration day. I know that sounds crazy, but oftentimes on primary expiration days when open interest is super negative, the move tends to ignore it, and you usually get a bullish, usually you get a pretty bullish day at some point when those options start coming off the board. So I think I've shown this before, but I usually keep a kind of chart of open interest, and as you can see, hold up, let me take a look at this again. Let's see, because it is not, my spreadsheet is not updating correctly. So let me take a moment to figure out what's going on with that. Okay, sorry about that. I'm having computer issues this morning. All over the place with this Microsoft for some reason. Even in my Microsoft Word, my editor is not editing correctly for some reason. It's just haywire right now, and spreadsheet was acting up as well. But going back to the open interest, what I said first was completely incorrect, but based on the updated open interest, if we continue to hang below 390, it could be a very negative day, but breaking back above 393 kind of opens the door up for a nice bullish move. So that is the correct take on open interest. Will we get that move back up above 393 to open that door for a nice bullish move? With that being said, let's get to the key levels of the day. And here we are back with the key levels to watch for today. Starting on the support side, we've already pierced our jack support at 392 to the 391 area. Queen support is at 390 to the 389 area. I'm looking for kind of reversal in this area if we can make it down this far, somewhere in there. And then our king support is 388 to the 386 area. And actually, because of open interest, this does need to change. Excuse me. Alright, had to correct the king support. It is now 388 all the way down to the 384 area. There's going to be a lot of open interest if we break through that 389, 388 area. There's going to be a lot calling us to the 385 area. Alright, on to the resistance side. Our jack resistance is at 394 to the 395 area. Queen resistance is 396 to the 398 area. And then king resistance is 399 to the 401 area. As you can see, there's a highlighted area. This just kind of highlights an area where there is a lot of supply-demand change. So we've broken through it on the sell side. So getting back through that area is going to be tough as well. It's an area where there's a lot of change, a lot of orders. So just be aware of that. The main thesis for today is bullish, closing above the 393.83 with a projected target high of between 394 and 401. The alternate thesis is bearish, closing below the 393.83 with a projected target low of between 393 and 386. The weekly outlook is bullish bias with a possible retracement of around 403. And again, the monthly outlook is bullish bias with a possible retracement around the 394. We've retraced to both of those areas, taking out the 394 yesterday and overnight. So maybe we can get this reversal started today. The current major channel we are in is 397 down to 379. The major channel above is 397 up to 416. We do have harmony between the technical side, which is bullish, and let me go back and make sure. Yes, we do have, again, harmony. The technical side is bullish and the quant side is bullish today. So that bodes well for a bullish move at some point today, taking us back above that 390, what is it? The 393.83 area. This brings us to the scenarios of the day. All right, our first scenario is going to be our expanded range day structure. And if you notice, coming from yesterday till today, I saw no reason to really change the scenarios. They're pretty much exactly the same. And I'll get to that reason here momentarily. But the first scenario is our expanded range day structure. We could have an initial drop and chop sideways to down, find support once or twice before consolidating, then reversing and starting another up move. So this is our expanded range day structure. Alright, here we are with the second scenario, which is our rounded reversal day type structure. We could get a continued push lower toward the Jack or Queen support area, find midday chop around either the Queen or King support before going back up with the same energy or force we went down with the first part of the day. Again, this is our rounded reversal day type structure. I would also like to alert you to our vice versa alert on the rounded reversal day type structure, because we're down so far. You never want to shorten the hole, because you never know what's waiting in that dark hole for you. And a lot of times with the move that we have, it could be a decent rally straight up from here. So you want to be very, very careful of shorting in a hole like we are right now. But the vice versa alert just kind of illustrates the opposite scenario happening, where we get a rounded reversal day type structure, but we continue up through the cash open, which would look like this, and then continuing up in the round in the off the cash open. We would continue and probably get to our midday chop around either the possible Jack or Queen resistance area, and find that midday chop, and then the second half of the day we would pretty much come down with the same amount of force that we went up with the first part of the day. So it's just the complete opposite of what what we said in the first scenario on the rounded reversal day type structure. And that is the vice versa alert. And here we are with the last scenario, which could be our trend day down day type structure, which would mean we would open gap down and start with a small rally back toward the previous close, represented by the blue line. We'd find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible Queen or King support area. Not all the time, but usually we, on a trend day structure, come out the second half of the day and start with what's usually a head fake, looking to continue the primary trend of the morning, which would be down, and then reverse at some point, giving us some type of rally into the close. So that is our trend day down day type structure. I want you to be aware and be careful. There's a lot of kind of consolidation and energy building that could kind of take us on a sharp move up. And if that happens before the open, this could flip into a trend day up. And what you would see, which would be more of this, and then a pretty sharp move up, giving us a gap up, and then we would have a fade after the cash open, going back to test the previous close represented by the blue line, and then we would get our trend, our primary trend of the morning, which would be up. We would get our midday chop around either the Queen or King resistance area. And then, like I said, not always, but a lot of times we do get start the second half of the day off with a head fake that looks to continue the primary trend of the morning, but at some point we could get a fade back into the close. So that is the vice versa alert for our trend day structure. So like I've said earlier, when you have higher time frames battling for dominance, and it amounts to trend trying to make up its mind on which time frame is going to start to trend. This can be a very dangerous time to trade. This is where a lot of people see their accounts get ate up, because you come in on the back end of a few days like this where trend has been primarily down the last couple of days, and you kind of just give up hope and want to join the downtrend, and that's exactly when it blows up in your face. So you want to be very, very careful here, and that's one of the reasons why I'm not really interested in doing anything today. And usually this is one of those days where if I don't see something that I pointed out in pre-market, or see something exactly is the way that I need to see it, and it checks the boxes of a few indicators, and things line up, this is definitely the day where I will get out in front of the computer very early, because it makes no sense to keep sitting in front of a screen and getting lured into eating or eroding your account away. So that's how I deal with days, especially in these trend change type days where time frames are trying to fight for dominance. And it's hard to, well, you see the pattern, but you never know where the end of that pattern is going to be. So this is a time to be very, very careful. Another thing I wanted to kind of speak towards, we could kind of continue to drift here over these next few days, because if I can remember correctly, let me see if I can pull it up, but I think next Wednesday, no, today is the 7th. Okay, that was I pulled up the wrong day. But on the 14th, we have a FOMC announcement. So we could kind of drift lower or sideways to down until this FOMC announcement on Wednesday, and take another sharp turn and kind of get that, what's the word that I'm looking for, but we could get a really high impact day where a lot of stuff happens in a day, and then we get the rally shortly after that. So we could kind of drift, sideways, trying to, not completely down, not completely up. But once we get that announcement, we get a sharp move, and then the correction to that move, which could take us into a rally for the remainder of the year. So that's what I'm looking for. I will continue to peek my head in on the market, even if I'm not in front of the computer, waiting on those days so that I can begin to lay some more shorts for the coming year. So that's how I see the market. I hope this helps. again, be very careful, because your most important job as a trader is to protect the capital that you already have. And we do that by knowing and understanding the risk that we have in each position. And also, just in general, realizing when it's a choppy time and it's not a good time to trade, and it's a good decision just to sit on your hands and do nothing. That is a form of capital preservation. So, like I always say, your most important job as a trader is to protect the capital that you already have. We do that by knowing and understanding the risk that we have on in each position, and even not taking positions. And we manage that risk in accordance to our account size. So again, I hope this helps. Wishing you a positive trading day going into the holidays. Let's go out and make it a great one.